Contrary to popular belief, inflation can actually be a huge benefit to mortgage borrowers. You see, when you borrow money, especially on a 30-year fixed rate loan, you've borrowed that money for a fixed cost over the 30 years. Now, if we have inflation, the value of money over time actually goes down, and typically we see wage growth at the same time. So ask yourself this question: would I rather pay my mortgage balance back today at the present value of the US dollar, or would I rather pay that mortgage balance back in, say, 15, 20, 25 years when the value of the US dollar is lower and presumably incomes will be significantly higher? Right? Let me have you take a look at this from a different perspective. Let's say that you were able to qualify for a 30-year fixed rate mortgage at a rate of 3.5%. That's the fixed cost of the money over that 30-year term. But inflation during that period ran at 5.5%. Well, that means you'd be paying back the value of the mortgage with deflated dollars. And each year you keep the mortgage, if inflation is running hotter than the interest rate, you're actually reducing the cost of the debt, and you're ahead in that transaction by 2% because inflation is running at 5.5% and your interest rate is at 3.5%. Now, contrary to what many mortgage companies are advising clients right now, which is to take a lower interest rate and a 15-year fixed rate mortgage, that's exactly the wrong strategy if you believe, like I do, that we're going to see inflationary times ahead because of the reopening of the world economy, GDP increasing, and all of the COVID vaccinations that are happening, not to mention the unbelievable amount of financial stimulus, not only here in the United States by the US government, but globally across the world as well. So we have this moment in time where we have more money entering the monetary system than ever before. Because of all the stimulus, the world economy is waking up. Because of all the vaccinations, those things are more than likely going to push higher inflation rates ahead, which means a 30-year fixed rate mortgage is going to be the best possible strategy for most borrowers. So if you have more questions, we've written an article on this and you'll find the description below. So click on the link, review the article, let us know if you have any additional questions. We're here and we would just love to hear from you and answer any questions that you have. I'll talk to you soon.